Hello, everyone. This episode is about trust trust in the markets, in institutions, and in how money is managed when the world feels very uncertain. My guest today sits at the intersection of macroeconomics, fixed income, and leadership. With over 25 years in financial markets, he's seen how inflation, interest rates, geopolitics, and policy decisions ripple through investor portfolios, often long before they show up in the headlines. Sandeep Bagla is the CEO of Trust AMC. Over his career, he's led investment teams at some of India's most prominent mutual funds, managed fixed income portfolios for primary dealers and financial institutions, and spent the last decade within the Trust Group building new verticals, managing institutional relationships, and shaping long term strategy. What makes this conversation timely is that we're talking about the markets at a moment of global uncertainty, shifting inflation expectations, volatile commodities, newer investment products, and a new generation of investors entering the system. So, this episode isn't just about chasing returns, it's about understanding risk and responsibility and the role that asset managers play in guiding investors through uncertainty, especially when the temptation to overpromise has never been higher. So, if you care about where the markets are headed and how the mutual fund industry is evolving and what investors like you should be focused on right now, this conversation is for you. So, let's get started. Thank you so much, Sandeep, for joining in. And I think, like we said, we are at the intersection right now where there is that temptation to just make that quick buck, to look at those global headlines and get so unnerved. And, the fact that the markets have really been underwhelming in the year gone by. So let's look at the year ahead. And is it going to be more of the same? What are some of the market defining trends that investors need to watch for?
Hi, Avan. Thank you for having me on the show. So, it's a fairly contemplative stage that we are in.
Okay.
The last year, if you were to look at maybe the conversations by fund managers in January 2025, I think the outlook was quite bright. We were looking forward to things. And to be fair, I think the government has done quite a lot. They have reduced the income tax bracket at the lower end of the income. They have reduced GST. And I'm sure it was very painful for them to let go of the revenue that they would have earned in GST. So many measures that they have taken, and yet markets have not performed, or they have underperformed in case of maybe some of the categories like small caps. And I'm told that individual portfolios are faring even worse. While at Trust Mutual Fund, our small cap fund has delivered outstanding alpha, but the general experience of investors has been quite underwhelming. And at the same time, categories like gold and silver have gone through the roof. Global portfolios have done well on back of AI spent lending and investing. Other markets like China, Japan, Korea have done well. FPIs have been constant sellers. And the optimistic that the human beings are, we hope that things will change.
Yeah.
And I would like to believe that things will change. But the analyst in me seems to think that 26 may be a little bit more of the same.
Okay.
The global uncertainties haven't gone away.
Yeah.
We might get a deal from the US where the tariffs are reduced from 50% to a more manageable 15-20%, which we will survive. We will not thrive. We will do better than the worst case. But we are far from the best case. So I think it's a time of caution. And I think 2026 should be seen as the year for making investments with a long-term horizon. This is not a time to get satisfied with returns, not a time to look forward to returns. I think it's a time to invest, and it's a time for setting low expectations.
Okay. That was a breath of fresh air. Thank you for being brutally honest about that. It is going to be better than the worst case, but far from the best case. So, one of the things that is, of course, bothering us a lot is the inflation or hyperinflation, as you like to call the scenario. So let's just talk about it at a time when we are looking at growth uncertainties. You spoke about the tariff tensions as well. How do you see inflation evolving? And more importantly, what does it mean for interest rates and what does it mean for real returns in the market?
So inflation is, is a phenomenon which mostly takes the backstage.
Mm.
And typically the fixed income traders are the people who are worrying about it. And we all hope that it doesn't come take the main stage and come in the forefront. And if you look at the headline inflation today, it's below 1% in India. So it gives the impression that everything is hunky-dory, that everything is fine. But somehow the bond yields in India and in the US and in other developed markets like Japan and Europe are all rising.
Mm.
So what is happening is that the short-term interest rates are low, short-term inflation is low, but the long-term inflation expectations are high, and I think they are getting out of control.
Yeah.
You know, US is the mother market, and they are putting tariffs in trying to revive their economy. Now, this goes against all rules of free trade, of competitive advantage, of free trade and better pricing. For the last 10 years, from 2010 to 20, inflation did not really go up in spite of huge money spending and money creation by the central bankers. The G4 central banks increased their balance sheet from $3 trillion to $26 trillion in a matter of 13, 14 years. And inflation did not really come up. Probably it was because of productivity gains, China exports, India exporting cheaper labor from India. However, those days are gone now. And the central banks have reduced their balance sheet, but they seem to be coming around that they will be printing more money now. They have cut rates, but inflation expectations have not come down.
Mm.
Core inflation has not come down. Commodities are going up. Gold, silver is going up. So we have central bankers talking about inflation X gold, X silver.
Yeah.
But the indices have been created after a lot of thought. So one should not really look at index for their convenience, removing things which are going up.
Mm.
Even if you do and you cut rates, markets are smarter. We have to, as fixed income traders, as fixed income investors, we have to protect against inflation for the next 10 years if you're buying a 10-year bond. So one cannot buy a bond at a yield which is beating current inflation but not beating the forecasted inflation. So I think inflation expectations have not come down.
Mm.
And I think what the US government is doing, they are putting tariffs. So what is being sold for $100 will probably sell for $120. This will lead to higher inflation. And while the central bankers have been trained to say that this is a one-time impact, nobody knows. And bond investors are not going to take the words of central banks and governments for granted. The yields will go up. And if we see inflation coming down, they will come down, but not in 2026.
Okay. So that is going to be that monster that will continue to rear its head, I guess, even in the year ahead.
I think in absence of any other great news, this one bad news we cannot ignore.
Yeah.
And people will start building in expectations of tighter monetary policy, higher interest rates at some point of time in 2026.
Hmm.
And how that impacts stock prices, commodity prices is something that is we have to wait and watch.
Okay, and that's sort of preempting my next question because let us talk about how commodities have fared. What a year it's been for gold, but perhaps the next year, are we going to see gold and silver lose their sheen after this meteoric rise? And what does this tightening monetary policy, etc., mean for commodities such as precious metals?
So right now there is no tightening monetary policy.
Hmm.
Right now, monetary policy globally is being eased.
Yes.
The US Fed has talked about are going to increase $40 billion of purchases of short-term treasury bills from this month onwards. So that is, if at all, there is going to put some additional liquidity. Gold has been traditionally known to be an effective hedge against inflation. So if inflation is expected to go up, gold will go up. Closely linked to gold is silver. So traditionally, there have been a certain ratios in which silver trades. And I'm told that the ratio has become fairly wonky and silver has a lot of catching up to do.
Yeah.
So uh, I guess the alarm bells are still going to ring and it's not going to be easy. And while if a commodity has gone up by 40-50% in a year, I think silver has gone up almost 100% in a year. It's quite possible that they will correct. But if the underlying forces are not tamed, if the central banks don't stop printing money, then there's a very high possibility that gold and silver will surprise us on the upside
Okay.
in 2026.
And it's interesting because you've had the ringside view of the market cycles over the past many years. In this current environment, how should investors look at balancing growth assets like equities against some of the protection oriented assets like debt, gold, and even multi asset strategies?
See, I have been always a proponent of a balanced asset allocation, irrespective of the market performance for the retail investor.
Hmm.
See, I don't think that every investor should try to become a Rakesh Jhunjhunwala or a Warren Buffett. What Mr. Buffett had once said was when at a time when Bill Gates and Warren Buffett were the two richest people and they were on stage together as friends, he said that everybody believes that they can do what I have done, but nobody believes that they can do what Bill Gates has done. So I don't think that, people should try to maximize and optimize everything. There's a lot of merit in remaining properly allocated across asset classes. Your point is valid. In a time when information is less about the future, uncertainties are higher, one should take slightly more defensive bets. One should increase asset allocation to debt and probably gold and silver as well, but not beyond a point. One should talk to an advisor or a distributor or a wealth manager and keep at your asset allocation which you have already decided upon. But yes, I see merit in taking evasive action against possibility of inflation going up and increasing allocation to gold and silver and probably to fixed income as well.
Okay. Now I want to shift gears and talk about your journey at Trust Mutual Fund. Tell us about how it's been so far, especially with the fact that now you are looking at a new AMC, building scale in a competitive market. Tell us a little bit more about that, and especially about the fact that the small cap fund as well has gone to outperform its peers.
Okay, so at Trust Mutual Fund, we started our fixed income journey to begin with in the beginning. And only 1.5 years back, we started with equity offerings. We started with Flexi Cap Fund, which is now close to 1,200 crores. In November 24, we launched a small cap fund, which has completed 1 year. However, we have launched multi cap fund after that. We have got extremely good response from investors and from distributors as well. So India is a mammoth country and distributors are everywhere.
Hmm.
The good thing is that earlier we were a nation of savers. Equity markets were not a safe place to be in.
Hmm.
The settlement systems, mechanisms were not robust. Stock exchanges used to go bust. We have come a long way from that. So today, I think there's a lot of trust which has been built by the regulators, by the stock exchanges, by the mutual fund companies, and equities has become a respectable name.
Hmm.
And I think the number of investors has just exploded in the last 4-5 years. We have found acceptance, and I think we are living in a new age where people care about performance and not so much about the brand that you belong to. So we have been able to create a niche, and the same goes for some of the other newer AMCs which have come in the last 4-5 years. And as a group, we are emerging as a very good competition to the larger AMCs who have been around for 20-30 years. So our experience has been quite good. We have almost close to a lakh of investors with us now in retail. So while it's still a drop in the ocean,
Yeah.
but I think we are going in the right way. We are adding distributors. We are moving to more locations. We are in 20-25 locations right now.
Okay.
And I think we are covering about 65 to 70% of investors in India today.
Okay.
So I think our journey has been quite satisfactory.
Hmm.
And we hope that this momentum continues. I think this is a mega trend.
Hmm.
Investors will shift from savings to investments. They have to be a little patient because there could be, mid-flight turbulence. But one thing is sure, that we are in a flight which is still, going up.
Yeah.
And I think we have a long way to go. So I think investors will be there with us for 15, 20 years, I think. So as Indian equity investors, I think it's a great time.
Absolutely. So hopefully it's going to be flying high and the sky is the limit, isn't it? So you touched upon distributors, and I just want to sort of double tap there. Tell us a little bit more about their role, how you're tapping them across the country, what has been their view of markets, your kind of interactions with distributors, what you hope to achieve in the years ahead.
So I think distributors, what are earlier they were called IFAs, independent financial advisors, and now they are called mutual fund distributors.
Mhm.
I think they're the backbone of the Indian mutual fund industry. They have grown a lot with the industry, and they have done a lot to increase the investor base. See, we always tend to underestimate their role. The investors who have stayed the 10, 15 years, they have really gained from the power of compounding. But in hindsight, it seems a very simple thing to do. But in real life, in real time, there have been periods of volatility. There have been, global financial crisis. There have been COVID issues. There have been taper tantrums. There have been the debt crisis. There have been a lot of ups and downs. At that critical juncture, when an investor gets scared and his confidence or her confidence in the Indian growth story gets shaken, it is the distributor who handholds them and advises them and tells them to remain invested. And I think the distributors are an evolved lot. They ask very important questions. They keep us fund managers at bay by asking us the right questions and holding us accountable.
Yes.
Uh, they have widened the investor base. So I think the role cannot be overemphasized. There has been the entry of a new kind of distributors now. Some of the platforms which are tech enabled, the Zerodas and Grows. I think they are playing a very important role in terms of expanding the market, getting new investors in. I think once the new investors are in and they are ready to commit serious capital, they will probably reach out to the mutual fund distributors for advice and
Okay.
for allocation. So I think it's a very complementary ecosystem which is going to grow the Indian mutual fund market for the years to come.
So how does this benefit a mutual fund investor and the overall, landscape for the mutual fund industry as a whole? Um, does it help them with more choices? How are you looking at the emergence of these new AMCs, like you said, the likes of a Zerodha and a Grow? How does it change the dynamics for the industry as a whole?
So I think in terms of the choices, see, for consumer, choice is always a welcome
Yeah.
addition. While in retail, I would say 90 to 95% of business is in traditional products. And that I think will not change. Uh, the new additions are always great excitement. And, we have something called SIF, which is coming.
Yeah.
We have PMSs, AIFs, we have sectoral funds, thematic funds. They will always remain in the periphery. Your flexi cap funds, small cap funds, balance advantage funds will always command a larger lion's share of the wallet share of the investor. But I think these are good things because they give you different risk return combinations to choose from. Lot of new AMCs which are coming, and there are a lot. I think at AMFI, I'm on the AMFI board. A couple of months back, the 50th AMC
Wow.
has taken approval. And I'm sure with the number of pipeline that we can see, we will soon cross 60, 70 mutual funds AMCs. They will try to have a differentiated strategy. Some of them will be quant based. Some of them will bring different approaches to investments. So I think increasing the investment set for investors is always great, but I believe the lion's share will still be commanded by the traditional products.
Okay.
And in retail, simplicity works. In life, simplicity works.
Absolutely. Simplicity and keeping it easy is a way to go. So, when you're looking at the mutual fund industry's evolution over the next 5 years, over the next 10 years, what do you think is going to matter the most? Is it going to be product innovation? Is it going to be performance consistency? Is it going to be investor education? What do you think?
I think investors will educate themselves. I mean, we do at AMFI level, we have spent a lot of money and effort in a very simple communication mutual fund sahi hai.
Yes,
And that has really worked well.
absolutely.
I think it has taken the, but I think also what is important is that people's experience with mutual funds has been good. So on a standalone basis, advertising would not have worked. I think people will learn on their own. I think what will determine the success of an AMC will be consistency. I think people want less volatility, predictable returns. We are essentially trying to carve a smooth experience from a volatile world for the investor. I think that is what we should aim for. Our fund managers should try to adjust the risk and try to get returns which are realistic.
Okay.
Reduce the volatility. Do not take undue risk. There is time for hitting sixes and there is time for taking singles. I think with the pitch bouncing in a very unpredictable way and the winds are not very predictive, I think it's time to take singles and not to try to hit for sixes. So I think funds who will do that will be more consistent, and I think that over the long period of time, I think consistency will work.
Absolutely. Keeping it slow and steady, but very consistent and taking your one run at a time. If I were to ask you from a long term lens, given that you've watched so many market cycles, where we're at currently, which are some of the sectors that are looking compelling for the long haul?
So at Trust AMC, Trust Mutual Fund, we like to believe that mega trends are some things where there's a sociological change, there's a change in taste and behavior of people, and those trends uh, can last for long periods of time, like 30 to 40 years.
So, what's the mega trend?
So the mega trends that we are bullish on right now is one, the capital markets, where the players in capital markets activities uh, will benefit over a long period of time, whether they are brokers or they are wealth managers or whether they are AMCs or service providers, distributors, and there's a fairly large list to choose from. However, one word of caution, lot of optimism has already been built.
Yeah.
So if one is investing in these mega trends, one should remain with the mega trend for a long period of time to overcome the short-term volatility and benefit from the growth. A few other mega trends that we believe, I think we don't really have to do some great research. If you look around yourself, today we are living in a world where yesterday's luxuries have become today's necessities. People are not easily satisfied by things. People are chasing experiences, premium consumption. People are watching. Earlier, there was a time when people used to go to concerts. I'm talking about musicians, they used to hold concerts so they could sell albums.
Yeah.
Now people come out with albums so they can sell concerts.
Yeah.
So basically, people are willing to pay money
Yeah.
for unique experiences.
Absolutely.
So I think premium consumption will do well. Hospitality will do well, whether it's hospitals or hotels. I think these are the sectors that will do well because I think people will borrow and spend. So I think
These are
premium consumption should do very well.
okay. So from with all of the macro uncertainties that are currently present, be it global growth, politics, geopolitics rather, tell us what an investor should do right now. What is the strongest motivator for an investor, and what is the biggest risk factor?
So the answer lies in one word. Okay.
Okay.
It's inflation. So the biggest risk is inflation. It will eat away into your purchasing power.
Okay.
If you are sacrificing today's consumption for tomorrow's consumption, you have to make sure that you consume the same thing tomorrow or day after. So you have to invest in accordance with inflation in mind in avenues that will beat inflation with a margin. So I think one need not do something very complicated. I think some exposure to gold and silver, greater exposure to fixed income, and greatest exposure to equities, I think will do them well. I think the critical thing to do is that, when we look at the investment or compounding formula,
Hmm.
what people tend to focus is on the rate of return,
Yeah.
but not the number of years that you are invested in.
Yeah.
I think it is time to ignore the rate of return for the time being and focus on the increasing the number of years that you are invested in. I think that will hold you well. Look towards the long term and ignore the short term movements of the market.
Okay, that's interesting. That don't really focus on the rate of return, but how the length of your investment or how long you are actually invested in the markets. Now, from a leadership standpoint, what do you think is the single most important principle that an AMC must stand by today to earn long term trust? And what is it that you do at Trust Mutual Fund in order to ensure that?
A much often used word is customer focus.
Yes.
Everybody talks about customer focus, but in reality, very few people are customer focused. People are mostly self focused.
Mm.
Okay. So I think eventually there is no dichotomy. If you are customer focused in long term, you will be self focused. So I think focus on the customer, be close to your customer, whether it's a distributor or the investor. Focus on what they need and provide that. Eventually, over a long period of time, that goodwill will compound, just like the rate of return.
Yeah.
And that will hold your company, your stakeholders in good stead. So I think there is no dichotomy really.
Mhm.
Focus on your customer, other things will fall into place.
That is the mantra that you at Trust Mutual Fund, I'm sure, are adopting on a daily basis. But Sandeep, not going to let you go that easy. We've got a quick rapid fire. So this is going to be spontaneous, quick answers that come to your mind. Are you ready?
Sure.
What's going to be the defining trend or sector for 2026?
I think metals will be the defining sector.
Sector. Okay. What is the biggest investment mistake that investors tend to make?
Leverage.
Okay. One rule of investing that you swear by.
I don't swear by any rule of investing. You have to respond to the situation
Okay.
as it emerges. But if your investments is not your primary activity, if you're a carpenter, if you're a filmmaker, if you're a podcast host, if you're a glamorous model,
Experts.
then leave it to the experts, give it to a mutual fund, give it to Trust Mutual Fund, and let us do the needful.
Okay. Is cash underrated today?
Cash is always the king.
Ah, okay. Inflation or impatience? What's going to be the biggest risk for an investor? The bigger one.
Inflation will be the external risk. Impatience will be the internal risk.
Okay. Your hope for mutual fund distributors in the years ahead?
I think this industry has given a lot to us, and
Okay.
it will continue to give a lot to us in the future also. So, great work and keep at it.
Okay. One of the biggest red flags in a sector or a company or a stock that you would say, I'm not putting my money there.
See, never say never.
Oh,
At a price, everything is, exciting. Everything is worth investing in.
okay. Okay.
So,
Yeah. And top three qualities that you look at in a company which, makes you feel that it's a high conviction idea.
I think the quality of management,
Okay.
I think that makes the biggest difference.
Hmm.
Second, if it's the mega trend, then the tailwinds will carry you further than your individual efforts could.
Okay.
And I think the intentions of the company, I think
Yeah.
that is the most important thing.
Okay, so some of the biggest risks in the market, what we need to look at from a long-term perspective, the outlook for mutual fund distributors, and most importantly, what investors need to do. Thank you so much, Sandeep, for spelling all of that and so much more out. It's really been interesting talking to you.
Thank you, Avanne, for the lovely set of questions. Thank you so much.
Okay, so if there's one thing that this conversation reinforces, it's that investing is not just about returns, it is about responsibility. And that is what Sandeep has shared today through his perspective and through his experience. Thank you so much for tuning in. We'll catch you next time.
Mutual Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.